Sunita, your student shall not join. Hello, Sunita.
ಮ್ಯಾಮ್ ಜಾಯ್ನ್ ಆಗ್ತಿದ್ದಾರೆ ಮ್ಯಾಮ್.
ಯಾರು ಇನ್ನು ಜಾಯ್ನ್ ಆಗಿಲ್ಲಲ್ಲ ಅದಕ್ಕೆ
ಭವಾನಿ ನಮ್ ಸ್ಟೂಡೆಂಟ್.
ಕರೆಕ್ಟ್ ಒಬ್ರು ಜಾಯ್ನ್ ಆಗಿದ್ದಾರೆ.
ಓಕೆ. ನನಗಿಲ್ಲ ಈ ಹೊತ್ತಿಗೆ
Good afternoon, everybody.
Good afternoon, sir.
Sorry, I was having some network issues, so I could join late. So I'm seeing very less number of students now, Lakshmi ma'am. Are they joining? I joined late. I thought by that time they will be able to join, all of them.
Some 18 students have joined. Some Hubli and all, they'll join together, I think, in one place. I can start.
Okay, so students, as you know, last week only few of you and only 4 centers actually has done some presentation, and not all the students from all the centers for those 4 centers has also done the presentation, right? Now, I just wanted to let you know that there will be star of the month, and we are going to provide that award along with the students and the L2 and L3. So I want basically all the students who has not presented last time, or the teams, need to present on the next week, that is next Saturday. And Harilakshmi ma'am, as discussed with you, please forward the list of those teams and the students, and those students has to basically come and do the presentation.
Sir, I have sent a message. As soon as they send me the list, I'll forward it to you, sir.
Yeah, and in fact, Director sir has also said that we need to basically take these assignments and basically the presentation a bit seriously, because this will be the good for all of you. We want to, when you go and join a corporate, right, it is basically you are going to be in front of the customers. You need to basically interact with your peers. You need to interact with your subordinates and your manager. If you are not able to do that, then all what you're learning here will not be of any good help. So we want basically fine tune your presentation skills, your presentations, whatever areas we think you can improve, so that when you go and to the corporate world, or you want to start your own business, that is going to really help you. Any questions, students? Hello, students, any question? Hello. I think all of you are on mute. Please unmute and let me know if you have got any questions. Hello, students. Are you able to hear me? Meghna, yeah, so if you let me know, if you can come on the camera, please, and switch on your camera, and please let me know what is not clear so that we can discuss.
No, sir.
Hello.
I'm saying no questions are there. Everything is clear.
Okay. So I will request all of you to please come on the switch on your camera, please. And next is that, as you know, we want you to do the presentation, and you need to basically present whenever we are asking for the assignments, you and your team. Okay.
Okay, sir.
Great. So we're going to start with a new topic today. And before that, I just wanted to let you know that the new area, what we are going to venture out, is basically going to be very, very interesting. So I just wanted to know, I've seen a lot of you are from finance background, or you have been pursuing something in finance. So if you can just come and switch on your camera and please let me know, or raise your hands, that will be great. And let me know who are from the finance background here. Hello, students who are from the finance background. Hello, students. Hello. I'm not able to hear any one of you. Are you from anybody from finance background? When we discussed last time, we saw some of you are from the finance background. Hello, student. Please unmute yourself, and I want this to be a more interactive session. Can you please ping me
Yes.
at least? Yeah, or just let me know who are the ones who are coming from finance background or have some knowledge in finance. Why I'm saying that, if you take any corporate world, whether it is Accenture, whether it is TCS, whether it is Atos, whether it is Capgemini, whether it is HCL, Wipro, Infosys, right? You will find that 40% of the revenue come from the financial services, right? So what is financial services is? Financial services is basically those industries which are basically working on the banking, insurance, capital market, right? So you will find a lot of IT work that is coming from this sector. And next, what we find is that there is basically a huge kind of churning that is happening in the finance world. You have seen some of the banks that has got absolutely bankrupt in the US, and what has had it resulted in? They want to basically reduce their operating cost. If they want to reduce their operating cost, then they need to basically have more automation. And this automation can only be derived if basically the students, the bright students like you, who are going to have a future lot of scope into this area. Then is basically you will find there are reporting that need to be done. For example, in India, if you are aware, you have got, yeah, somebody want to say something? Yes, please. Hello. Hello, yes, tell me. Hello. Hello.
No, sir. No, sir. It's some background noise. I have muted
Okay.
it.
Okay, so let all of you switch on your camera so that at least it will be great. We can see each other. Okay, great. So as you can see here, what is happening around the world is that there are a lot of opportunities that has come to your area. In India, for example, there is basically, you have seen the reporting has to be done as per the Companies Act. The reporting has to be done as per the Income Tax Act. The tax reports need to be done. Now with the invent of the GST reporting has to be done. And you have that before used to be central tax, state tax, right? Octroi, all those things were there. Those things are abolished and GST has come in place. Now, all those things, basically what is happening is that there is a huge scope for you to do basically kind of solutioning and also develop softwares so that those systems can work perfectly and smoothly. If you go basically to different regions around the world, right? If you go to Brazil, nota fixa is there. You go to China, golden tax is there. If you go to Turkey, there is basically you have to get those invoices sent to the portal, and once it is confirmation is available, only then you can invoice it to the customer. If you go to Poland, you have got a eSoft is there, basically invoicing software is there. You go to UK, it's a Brexit that is there. You go to Saudi, Zakata is there. So those are the localization of tax, and for those also new development need to be done, right? So there are multiple use cases of the reporting. Next is the banking also. If a customer walks into a bank, right, there has to be kind of a CRM system where the recording of the customer, what are the interaction is happening, those need to be recorded. Only after that you have to have the credit verification whether they can give loan to the customer or not. You have seen, if you want to go to a bank, if you want to take a loan, you have got basically a lot of verification happens, and after that, if it is okay, then they gives a loan to the customer, isn't it? Similarly, in India, there is a CRISIL. They provide a rating. Based on that rating, you will find you have the what kind of a loan percentage that can be given to the customer is provided. Now, all the recording need to be done into the system, and for that, you need to have a proper software need to be developed. And also with the changing of taxations that is happening, the rules that are happening, you need to basically have your software ready for that also. Similarly, you have the banking, you have got multiple years of contract, those banking happens, and as per the rules that get changed, one has to adapt and change the software accordingly. So, and then of course, maintenance of that. And with basically the banking industry going into such a huge problem, right? They will look for more of automation and reduce their cost. And for that, they will outsource a lot of work to India, where you have got huge number of IT professions who can work on this, right? So to make you understand why I want to take a topic on today, mostly on finance, and make you understand what is the importance of that, so that at high level, when you go to any corporate, if you want to work on those areas, you will be absolutely very happy, because what I see, there's a market of huge for the next 10 years, more than $20 trillion. And you can understand how much basically this market can provide to you, right? So coming to this, you need to understand how basically in a corporate, how the balance sheet, profit and loss, how it works, how the reporting happens, and what are the things you need to take care. Similarly, you need to understand, for example, how, if you want to go to investment banking, or if you want to make yourself as investors, what are the parameters you need to look or check so that you can do a proper investment. That is for yourself. It is not for others, right? So next, you can create your own programs on that. And these are the areas one can focus on, and there will be huge requirement for all of you. I know you, all of you are studying, some of you are studying SAP. Now, if you want to study SAP, right? Now, in SAP also, if there is a material movement happens, there's a finance transaction. When a goods is procured, right? There is a GRR happening. On the other hand, it will go and hit the finance. Next is that when you are going to basically, depending upon your payment terms, you make a payment to your vendors, right? So when you make that payment, again, it will hit your finance. Similarly, you need to know when you want to go for a manufacturing, you need to know the product costing. The finance guy can help you, but if you want to develop basically the software or basically program for it, you must be aware how it is work and how I can help that. Because if you do not have a basic knowledge, in this case, it will be very difficult for you to develop those programs or support those programs. Next is that when a goods is sold, there is basically an accounting transaction that will happen. It will hit your revenue account, it will hit your basically tax account and your receivable accounts, right? Then the customer pays the amount, then basically your receivable gets knocked out and your customer balance also gets reduced. That is your receivables. Now, when you have to have doing a bank reconciliation, right? What comes in the banks. So as I told you, you pay to the vendor, that is basically for the bank balance, it gets reduced. When the customer pays you, the increases. Now you have to match it with your book also. You need to know how the reconciliation happens. And those are the areas where automation is of course required. And my students, as you know, nowadays, it is not done with just programs. Here, basically AI and ML is also taken into care. Because looking into what are basically the previous, what has been done, matching of those transactions need to be done. Here, what we foresee, there is a huge demand for IT professionals like you, where you can play a role on the reconciliations. For example, the people who are in the finance domain, that's why I was asking, the GRR clearing account or multiple clearing account happens. Those reconciliations also nowadays are not done manually, and for that programs are there. And for that also, one basically looks into basically how we can use the AI ML to help them to make those faster. Next is that the reporting, the most important thing. Now, in SAP also, you have got multiple reporting that can come out from your SAP, right? You have if you go for S4HANA, basically what happens, the finance whole thing comes to a universal journal called SE Docker table. And in the SE Docker table, basically you have the real-time, all the information, the real-time, basically you have the reconciliation between FI and CO. CO is the controlling, management accounting. And from that, you can go to SSE, where you can have basically the predictive reporting and also very good, fantastic reporting that can come out, right? And next is that you have the Fury, who are basically from SAP. You have how many of you have got some basically hands-on experience on SAP? Anyone L2 here? Has the student able to do some configuration or testing on SAP?
Yes, sir. There are around 10 systems that we have configured with SAP, sir. They have hands-on experience.
Okay, so anybody have you used Fury, the embedded analytics? You can do the transaction level or analytical level of reporting.
No, sir. Still, they have not gone to that extent. As of now, they are only touch the GL configuration, sir.
Okay, great.
Still,
I
we
just
need
want
to go, yeah, we need to go on with AP, AR, and after that, we are going to touch the interactions.
So you have seen how the company codes is created, and based on the company code, you need to assign a chart of accounts.
Yes, sir. That people are familiar with, sir. Thank you so much, sir.
So you have the group chart of accounts and you have the company code specific chart of accounts, right? And in the company code specific chart of accounts, you will have basically the localization. For example, in India, if you want to do the reporting, you will have those additional GL accounts that need to be done, right? Now you have the finance, how the reporting will be done. Basically, for the persons who are interested, you have basically the financial reporting, and for that you need to check and how basically those GL account need to be assigned. So have they know how those basically financial reporting is done, how the GL accounts need to be assigned for the grouping, so that the balance sheet and profit and loss is getting reported?
No, sir. Probably in another couple of weeks, we are going to introduce to that, sir. But chart of accounts has been informed to them. We have still not gone to the controlling part.
Okay. Okay, so now basically then I will not talk about on those things because you are not aware most of the areas, but I will directly take and share my screen and just let me know whether you're able to understand, able to see or not. So student, basically I just wanted to again check with some of you who are from the finance background. Can you raise your hands, please? If you come, all of you come in the share your camera and can raise your hands at least, who are from finance, at least know finance something, has been studied like BCom or studied finance. Any one of you, if you can just raise your hands. Okay, great. Chandrakant. Great, Meghna. So don't worry. Finance is very, very easy, right? Let's go there. And let me share my screen. Let me know. Are you able to see my screen?
Yes, sir.
Okay. Okay. So students, let me make it full screen. Now, any financial statement that comes, right? What we able to understand, the companies that publish the profit and loss or balance sheet, right? Now, for example, I think some problem in the internet. Okay, good. So if I scroll down, I think due to my internet problem, you have to just bear me. Just give me 2 minutes. So you can see this is for one of the companies where they have got the basically the reporting that has been done. I've just gone to the internet to show you so that it becomes very, very easy for you. And here itself, you will find basically kind of balance sheet, profit and loss. They have done the reporting. So we can just check it from here. Just let me just go there and show you. And you can see all those things. Are you able to see my screen? This all basically informations that really helps basically for any investment guys, right? Now, this is basically kind of a train that comes for the investment, but we are not going to go there. We are directly going to go to basically financial reporting. So I just wanted to check where the reporting has been mentioned. I'll just go to there. Yeah, to the financials, as you can see. You can go to moneycontrol.com or any sites, right? Go to financials. Otherwise, if it is not coming, don't worry. I have got basically created for you. Now, for example, student, are you able to see my screen? Hello, students.
Yes, sir.
Okay. Now here you can see, just for example, ABB, right? This is for the last 5 years, the reporting for the annual. ABB has got January to December, they're reporting. Now you need to understand before we jump into what is sales, right? Sales is basically throughout the period, for the accounting period, what we are basically mentioning. Now, in this case, 1 year, that is annual, as you can see, that is from January to December. They have got 8,567 crores is the revenue for the last 12 months, that is January to December 2022. In this case, they have got 6,934 crores. Here is 5,820 crores for the year 2020. And for 2019, they have got 7,315 crores. Now, like this is an other income, which is not coming from the operation. So if it comes from other income, so this is the other income. Total, if we add the sales and other income, it becomes my total income, right? Now, next is that I will have the total expenditure. As you know, what is expenditure consisting of? You have you have to pay a rent for your factories maybe, or for your shops or your offices that you have taken rent. You have to pay basically your salary to your employees. You have to buy your basically raw material, goods, right? So those will all be coming under expenditure. And after that, the total income minus your expenditure provides you basically EBIT. EBIT is basic earning before interest and tax, right? So after that, you have to basically have the interest, because you must have taken loan for your maybe factory building or for your assets or machineries, right? And for that, or working capital, you have taken a loan on that and you have to pay the interest. So once we pay the interest, then it becomes EBT. EBT is basically earning before tax. And then based on tax, the tax calculation happens as per the rules of that country, and based on the tax will be given, and then comes your net profit, right? So net profit or PAT is basically after the deduction. Any questions, students? Hello, students, any question? Hello. Hello.
No, sir.
Okay, sorry, it's some problem. Let me try it again from internet, so that so this is basically any one of you can go to any site. So you can go to moneycontrol.com. Now, after that, I'm just taking ABB because I'm showing you ABB. Any other, basically, you can take any other companies, right? Now, after that, if I go to the sorry, some problem. I think. Let me close this. Let me close all the advertisements. Okay, so now I move here. So I will go to the basically finance or the reporting, right? Or the financials. If I go to the financials, so you can see industry comparison, prices, share holding pattern, everything in this kinds of reports it comes, right? Okay, maybe other this thing is, I think, some problem we are facing. Now, let me go to another company. For example, we can go to Coal India. Now, if I go to Coal India, this is how basically the reporting happens. Now, you can see similarly, you have got in a different way, you know, Coal India is a government company. So you have got revenue from operations. Now you have got basically excise and service tax and others. And as you can see, due to the change in the rules, now GST has come. So this has got become 0. And also you can see there has some change in the rules now, which was revenue from or accounting policies they have changed. Now, suddenly this year, as you can see, it has become absolutely very, very less, right? It has got reduced, and also the last year. So one has to go through and understand, right, how basically the reporting has been done. For example, if I go to ABB also, right, you can see there has been a drastically reduction in the sales, right? Overall sales. That means they must have sale maybe a part of their business, or they have hived out, or they have stopped production of that, or they're not using it. So something has happened in this year. That's why there has been a reduction into their overall sales. Now, how basically as you go to a doctor does some health checks. So ratio accounting in finance world helps in doing the basically kind of a health check. Similarly, if you come here, now, as you can see for this year, now there is some revenue from operations, then basically the other operating revenues, and this is other incomes, and this is your total revenue it comes, right? Now, if I go down, scroll down, then you will have basically the cost of material consumed. Cost of material in whole India is very, very less because you don't require any materials because it's a mining company. Then operating and direct expenses, right? So this is basically the expenses they are doing for the operations. Next is basically, you can see there is a change in the inventories. So basically opening stock minus closing stock, that is basically the change in the inventories, what we see in the finance world. Employee benefit expenses, that is nothing but your salary and wages. The finance cost is basically the interest cost, or some other basically related to the financing if they have been doing some cost to that. Depreciation, I hope all of you are aware. If you purchased a machinery, depending upon the type of your assets, you have got a depreciation. For example, there is a different depreciation rule or basically rate for a car. Similarly, a different depreciation rate for a machine, and also there's a different depreciation rate for a furniture or a building. And also the number of shifts that machine is working based on the wear and tear of that machine, the depreciation rate will also change. If it is working on one shift, for example, it can be 10%. If it's working for 2 shifts, it can be 15%. If it is working for 3 shifts, it is 20%, because the wear and tear of that machine will be on a higher side. Any questions, students? Next is the other expenses, and this becomes your total expenses, right? Now, this is basically the total income minus total expenses provides you the profit and loss. And this is here, you have your total profit and loss. And after that, whatever the taxation amount comes, you have to pay the tax. I'm not going to the deferred tax because deferred tax is basically kind of a tax, which, for example, you may have purchased a computer, right? And it provides maybe you 1 year of warranty, 2 years of warranty, or 3 years of warranty. Now, for that case, you have basically paid, for example, 3 years of warranty, and you have paid 3,600 rupees. Now, for that warranty, basically basically you've taken, some of you may have taken a geophone, right? I'm just giving an example. Now, at the beginning, you have to pay maybe 36,000 rupees. That is basically your cost for taking 36 months, and for which they're not going to charge you any kind of any other charges upfront you have to pay. But the company cannot recognize this 36,000. For each month, it is 1,000 they can only recognize, and that becomes their deferred revenue and deferred receivables, and they need to knock it off. And based on that, if there is any taxation comes, that is also the deferred tax that is come. So I'm not going into the complexity. So that is how it is calculated. And one need to basically look into it. Just since it is here, I just wanted to explain to you. And if any tax for earlier, any area is there, they need to pay it based on this. And this will be total tax expenses. And after that, the tax amount is paid. So you have got the EBIT, that is earning, sorry, it will be basically PAT, that is profit after tax, right? And after tax, what will happen is that you will be having the amount available for you paying the dividend. So based on the EPS, so if you're anybody of investing shares, you must be knowing there is basically some dividend you get based on the if the company earns profit and they declares dividend. Of course, there are different dividend rules are there, which one needs to follow, but generally you will find the government companies are basically quite good in paying those dividends. Okay, so let me close this. And any questions here, students? Similarly, here is the balance sheet, and balance sheet is also basically you have the liabilities on one side and you have the assets on the other side. Left hand side is basically the liabilities, and generally it will have the shareholder funds, that is consisting of the equity shares. Equity shares are basically, or the equity capital can be consisting of basically normal equity or can be preferential share capital. And total of that will be the equity fund, and then you have the reserve and surplus, and that will become the shareholders fund, what we call, or the owners fund. Next is, after that you will have current liabilities and non-current liabilities. Non-current liabilities is that like the deferred tax liabilities, long-term liabilities, or long-term provisions. Similarly, you have the current liabilities, which is your payables. Other current liabilities, short-term provisions, which you have created here, right? Next, if you see the figure here, it will match with your assets, right? If I go to the balance sheet, the other side, that is the assets. You have the basically your current assets. These are your current assets. Then you have the fixed assets like building, your machinery, car, automobiles, whatever those. And then basically in your current assets, you have got the inventory, trade receivables, right? Cash and cash equivalents or bank, whatever amount is in the bank. And if you see this amount, 20,440 will match to your liability here. And this will be happening for each and every year. Any questions, students? Hello, students, any questions?
No, sir.
Okay, so I'm now unsharing my screen, and just let me know if you can come on the cameras and let me know any questions on this till now. Have you understood about basically, see, in case of basically balance sheet, all your liabilities on one hand will equal to all your assets on the other hand. And we create basically profit and loss account, right? For example, to understand what is my profit or loss for that period. So for that, we will have our revenue account, whatever all basically we are selling, minus all our expenditure, and the remaining will provide basically the gain and loss or the profit and loss. Any questions? Hello, students. Any questions till now?
No, sir.
Okay. Before I go to basically, let me see whether I can show you generally how it is published so that you can see. I hope this time it works. Students, are you able to see my screen, right?
Yes, sir.
So let me do with the ratio accounting first. Financial ratios. I think I'm facing some problem on the moneycontrol.com. Maybe next class I will show it to you. Due to network issues, I'm facing some problem. Now, coming to this, what we do is that any basically analysis or basically health check of a corporate, we generally able to do with ratio accounting. And there are basically multiple ratios. So as a student, you need to know what are the ratios that are available to you and through which you can do any kind of a health check of a corporate. And this will help you in your future, whether it is analytical reporting or later on, if you want to go for investments, right? This will also enable you for more knowledge. In fact, in your interviews also, you can go basically go through the balance sheet and profit and loss, which is absolutely available in online of any corporate you want to take an interview. And basically using this simple analysis, you can find it out how the company is doing. And you can basically, in your interview, you can provide your insight. Sometimes the question is asked about the corporate, right? How the corporate is working or what is your understanding. With your analysis, you can absolutely stand your interviewers and you can provide some more insights, right? So first of all, in the financial statement, the ratios, as you can see here, the probability ratios, and in the, sorry, this is profitability ratios. In the profitability ratios, as you can see, we have the gross profit. As I explained to you before also, how the gross profit comes. The gross profit comes basically, you have the overall revenue minus your gross expenditure. Gross expenditure includes, for example, your raw material, right? And basically movement of your stock. So that is basically going to provide you, or the cost of goods sold. It's basically gross profit provides you the cost of goods sold, and based on that, it provides the gross profit. And after the gross profit, you have got multiple other expenditure. For example, you have the depreciation, you have the rent, you have got basically interest. So after reducing that, you get the taxation on that part, whatever the EBIT you are getting earning before tax, and you get the net profit, right? So with this gross profit margin, if the company is doing well, if the gross profit margin is high, that means the company has got, if the revenue increases, my gross profit margin will also increase with the same term. If next is basically the net profit, that means the company is having a net profit that I can invest into this company, that it is able to meet all its expenditure. Next is the return on capital employed, that is earning before interest and tax divided by the capital employed. So this basically provides you kind of how the company is doing and how the company is able to manage its capital that has been employed, whether I should invest in this company or not, right? If the company has basically, you are investing in this company, how the company's own capital, shareholders' capital, once it gets invested, whether it's getting proper return or not, right? If it's not getting proper return, then it's better basically to venture out into some other areas. So you should see, these are some of the parameters in the profitability ratio that are taken into account to check the health of a company. Of course, later on, I will explain to you how this is going to be helpful and how this is calculated. Next is the liquidity ratio. So this is very, very important. Now, liquidity ratio is basically provides you kind of an information or the health check for a corporate, whether they're going to meet their, basically the they've taken a loan, whether they're going to able to meet paying those interest or not, whether basically, if anybody is not speaking, can you please be on mute? Next is that you have seen some of the companies which falters into paying the share, basically the creditors loan they have taken, and they have to become bankrupt, right? So these are some of the checks. For example, you have seen there are basically some companies like Kesar Gujarat. There was basically it's a huge steel plant, right? Now they could not meet the liabilities, and then it has to be sold off. Now, of course, ArcelorMittal has purchased that company. You have seen multiple such companies which are not able to pay, become basically bankrupt or becoming very, very sick, and because of which they are either the people are losing jobs or not able to sustain the long run, right? So these are some of the ratios one need to understand and check looking into the balance sheet and profit and loss. What is the current ratio? Current ratio is the current asset minus current liability. And as per the industry terms, for a good current ratio, it has to be 2:1. Yeah, tell me.
Sir, what is the liquidity?
Yeah, sorry, can you please repeat?
Sir, what is the liquidity, sir?
Liquidity means basically whether the company is able to pay its liability, whether the liquidity is the term what we use in the finance, is that if I want to liquidate all my assets, whether I'm able to pay all my liabilities or not. For example, in the balance sheet, you have seen there are certain assets and there are some liabilities, right? If I sell all my assets, right, whether I'm able to pay all my liabilities and how basically strong I am. Now, if you go and check the balance sheet of some of the companies, right, you will find the company is running without taking any loans. That means they are basically are not dependent of any loans. If there is any kind of a storm comes, they're able to withstand. But they are not able to take the financial leverage. Of course, I will come to that other term that are basically the leverage company takes. Now, for example, if you have in a high growth industry, if you take a loan, then you can grow faster. But if your rate of returns is much higher than the rate of return or rate of interest you're paying, then you become more profitable. Okay, so these are the things as a finance person and expert need to look into it, and then basically they need to venture out or make their basically how the capital structure will be for the company, which will be best fitted for the shareholders. Ultimately, in any public limited company, as a shareholders, you are investing into the company, you will be looking for your return, isn't it? Hello, student.
Thank you, sir. Thank you.
Now, quick ratio is basically the current asset minus the current stock divided by current liability. And the best quick ratio is said to be 1:1. That is basically kind of a, as you know, you have got BP checks or blood sugar test. There's some parameters. So these are some of the parameters, of course, it is given. But again, it depends upon the what kind of industry, whether it's a seasonal industry or it's a capital intensive industry. So based on that, this ratio will also go for a change. But I'm giving you, this is an average that is there in the industry. Next is working capital, that is current asset minus current liability. So this provides you the working capital. Those who are in business, anybody coming from business family here or having business? Yes, student. Anybody coming from business?
No, sir.
Maybe
We are
you're
working in company. We are working in company. We don't have any business background.
like in okay, agriculture business or anything also, right? See, in agriculture also, for example, what will be your current assets? Your current assets, you have to buy seeds, right? Isn't it? Then fertilizers, you have to buy those. Now, you have to basically, your current liability will be your payables to those vendors, right? Then your current assets will be basically your debtors. Now, you will have debtors, for example, you are basically selling it to somebody, but he has not paid to you. Maybe he says after 3 months or 6 months, he's going to pay to you. So debtors minus your vendors. If now you take into an assumptions, right? If you do not have your debtors is not more than your creditors, if you're doing only on credit business, right? Then if your working capital becomes negative, that means your business is at risk. Are you with me? You need to have a positive working capital. And the more times you rotate your working capital, it is always beneficial to you. So these are some of the parameters one takes into look into when they go for the liquidity ratio. Now, what I'm teaching you or telling you at this moment may not be coming from finance background, but this is basically will help you when you try to analyze kind of a corporate balance sheet, profit and loss, or any. You can just take a look after this session. You can go to the internet and you can find it out. Next is your activity ratio, right? Or your turnover ratio. I hope all of you are able to see this, right? Now, stock turnover ratio is very, very important because cost of goods sold by average inventory, and that basically able to provide you how good are you able to turn around your stock. Receivable turnover ratio, that is net credit sales by average receivables. Or next is the DSO. DSO is very, very critical because if your DSO is more, that is daily sales outstanding, then that means you carry forward of your interest on the receivables is too high. If you receivables is, the DSO is more, that means you require more working capital. And that means you need to take a lot of loans and interest costs will go up. So one need to manage properly in this area. So as a basically coming from technical background, you can create some programs, you can basically create some alerts, and based on which it can help the management also. Kind of a dashboards. That's why we are asking in FUE, you have got dashboards. You can have, so those dashboards you can come from the SAP also, and one can see all those. Those are standard that are available. Maybe your L2s can just show it to you how those are coming. Next is payable turnover. Next, credit payables by average payables provide you the payable turnover ratio. The thing is that though if your the payables turnover, for example, you can say that if I got a longer payment terms from the vendors, right? That is quite good that I have to pay to the vendors, maybe not 30 days, I have to pay in 60 days or 90 days. But please understand, the vendors are also not basically are foolish. They will basically add the interest part of that because they're getting it after maybe 90 days, then they will add the interest and the cost of purchase of your goods and services will be much, much higher. That means you have to buy at a higher price, and which is not good for your business to be in the competitive world. So you need to basically balance your payables also in payment terms in such a way that you get the best price from your vendor. Cash conversion cycle, cycle is basically the stock velocity plus receivable turnover minus payable turnover. This is basically very, very critical because if you do not have the cash conversion cycle properly, or if it is on the higher side, what will happen is that your cost of capital will go up. That means you have to borrow more. And once you borrow more, that means your interest costs will go up. And if interest cost goes up, that will actually hit your bottom line. Now, suddenly, if the revenue comes down, then it actually, you will be at loss, right? So those things need to be taken care when one is doing the financing or it's in the reporting, right? So this is just to give you some kind of a high level, how basically the reporting is done or some of the areas into the using the ratios you can do. Next, go to the next kind of ratios. So student, hope this is your understanding. Any questions? Hello students, any questions?
No, sir.
So this is called the gearing ratio. Gearing ratio is the debt ratio, that is total liability minus total assets. This is very, very important to understand whether I'm able to pay my liability or able to pay my interest. Interest cover is basically EBIT minus interest expenses. EBIT is again earning before interest and tax divided by interest expenses. Now, for example, if a corporate where the interest cover is less than 1, that means the company has got liability to, it has to pay the interest itself. That means the company is already going to the verge of being in a very, very problematic situation, right? That means it is not able to pay the interest from its profit, or that is earning before interest and tax. That means already the company is at loss, and also it can falter the bank loans. And if it falters the bank loans, of course, the creditor will not keep quiet, and they will file a case against that company for bankruptcy, right? So these are some of the triggers, as you can see, to do the health check of any corporate. And this is very, very important because for you and for in your future, because this will help you to, when you go for a good corporate, you can check yourself, do your ratio analysis to check that corporate, whether you should work for that corporate or not, right? And also you should check when you're developing some programs, you need to have some basic ideas. Next is we call is the investor ratio. Now, I know in future some of you are going to invest in stock market or maybe join some capital companies, or investment companies, where these are very, very critical, these ratios. One is earning per share, or what we call EPS. It basically provides you how the company is performing, and also whether quarter to quarter or year to year the EPS is increasing or not. Because based on the EPS only, the company can declare dividends. So earning per share is PAT minus proposed dividend divided by number of shares. And dividend per share, everybody knows, is basically the dividend that has been paid out divided by the number of shares. If the number of shares is less, then if the profit is high, they can get a higher dividend. For example, currently you have seen HDFC Bank, for example, just declared some dividends, right? They have declared 6 rupees per dividend. For example, few days back, you have seen TCS has declared dividend, right? So those are the companies has able to declare higher dividend because they are able to earn good amount of profit, right? And based on that, they are able to declare those dividends. Yes, student, any question?
No, sir.
Okay, now for example, you have seen Titan, for example, Tata company, right? On 3rd May, they had their basically audited results and dividend. Now, if you see, they have declared 7 rupees 50 paisa per share dividend, and that is basically based on their profit, and that has happened few days back. Now, dividend cover is basically PAT minus preference dividend by dividend. So preference dividend is basically the dividend that is given on the preference shares, right? So generally a percentage is already mentioned, 7% preferential shares, 8% preferential shares. That means they have to provide kind of an 8% dividend on those shares. That comes before the dividend they need to pay to the ordinary shareholders. What the dividend I'm talking about, that is a dividend to the ordinary shareholders. Next is the price earning ratio. The price earning ratio is very, very important for those who are investing, because based on the P ratio, one need to check what is my other companies in that sector, what is the P ratio, and what is the P ratio for that company in the market. Now, P ratio is very, very important when the companies are quoted into the stock exchange. Based on that, one investor can look into and find it out whether there is a potential for this company to grow further in the increase in the price, the stock market, right? Now, if P ratio is nothing but the market price per share divided by the earning per share, and this basically determines basically whether the company shares are currently quoted below the market price or at the market price, what is basically the other competitors for these companies are quoted, or at a higher level. For example, in banking area, you will find HDFC Bank is quoted, PE ratio is much higher than the other normal banks, because that means it's already a bank which is basically having a premium into the market, right? So of course it doesn't matter. So that there are a lot of other factors also determines whether the company is getting a premium than the competitors or not, right? So similarly, this really helps the company for what is the price that it can expect as an investor. You can expect in the market. Market means a stock market for this company. Dividend yield is basically the dividend per share divided the market price per share. Now, you will find some of the investors invest on this basis also. For example, you take into account that last year, Indian Oil has paid 12 rupees as dividend, right? Now, currently, Indian Oil price is around 82.8 rupees. Now, if I divided it by 12 by 82.8, for example, whatever the percentage coming, it is basically giving higher than the fixed deposit. Then basically those investors can invest on those kind of shares, which provides higher kind of dividend. Now, of course, for Indian Oil, if you know, 16th of May, they're going to come with the annual results, and also they're going to declare the dividend. So depending upon that, one person can look into and can start investing on those kind of shares, right? Now, these are some of the parameters which I was telling you, one takes into account and looks into. For example, in last years, Indian Oil has paid, as I say, was 12 rupees. Now, if you calculate at current price, 82.8, that means already it has given a dividend of 14.49%. And as you can understand, that is quite high than the fixed deposit one can expect, that is 7 to 8% currently, the fixed deposit one can get, right? So based on that also, that means there is a potential for Indian Oil to go up. And also there are multiple other parameters. For example, Indian Oil is buying crude oil from Russia at a discounted price. And also if you see the price of crude prices has come down, now it's almost $75 a barrel, whereas the price of the petrol and diesel has not come down. That means it is earning good amount of profit, because the government has basically restricted the selling price before for these OMC companies. And because of which, what has happened, when the prices of crude was high, these companies actually made a lot of loss. And if you see the last 1 year for OMC companies, the HPSCL, or if you see Bharat Petroleum, BP's, then the Indian Oil, right, IOCL, now all has basically not able to earn much profit and are were at loss. Of course, government has compensated them with some on the gas price. Now, already in the budget, if you know, they've kept around 30,000 crores for these companies, because they were selling the price at a less than the international prices, because they've not been allowed to increase their selling price, right, where the crude prices were on the higher side. Now, looking at that, maybe one can look into that. It's good to buy now OMC companies, and they can expect a good return for these shares. So these are basically some of the parameters one take into account while investing in shares also. Any questions? Yes, student.
Sir.
Yes.
What is the difference between share and trading, sir?
Share is basically the company, for example, ABC Limited, right? ABC Limited basically has got 1,000 shares. So that means it is consisting of 1,000 shares for which it has sold to the, if it is public, maybe to the public, maybe there are 100 people it has sold, and each has got 10 shares. Just giving an example. Or it has sold to maybe 20 people. The promoter is holding 40%, right? So he's holding 400 shares. Remaining 600 shares has been sold to different people, right? There will be also foreign investors also can come and buy some shares. Domestic investors are there, like basically your banks, mutual funds, they also invest, and general public, they can also invest, right? So the remaining non-promoters holding, the 60% is held by them. So those are shares. Now, trading means if the shares, a private limited company, for example, cannot be traded, right? If it is only a public limited company, I'm not going into the basically the definition of private limited and public limited at this moment, right? Just to understand, private limited companies, the shareholders number is less than 50, and a public limited companies, right? It can have more than 3 shares and then has to be basically more than 7 shareholders has to be there, and there is no restriction on the number of shareholders, right? And there are basically, you have authorized share capital, and based on the authorized share capital, how much is the issued share capital, and how much is after the issued, how much is subscribed share capital, and based on the subscribed share capital, how many shares has been issued, right? Now, based on that, the number of shares are there. Now, for example, in India, we have got Bombay Stock Exchange and we have got National Stock Exchange. Okay. Now, in this stock exchange, if, for example, you take, for example, Tata Steel, or you take Reliance, right? Or so these are the companies. They are basically traded regularly into the stock market. You take HDFC Bank, right? So all those things are basically, the shares are traded on a daily basis. Now, let me show you if I able to get into this. That's why I was trying to get into. So this is any site you can have moneycontrol.com, for example. Now, if I go to here into the moneycontrol.com, right, and I go to ABB, I was showing you ABB. Now, hopefully it works this time. Now, this is the shares that is quoted. If you can see, now you can see this is basically the open of the share price that was on Friday, because it works on Monday to Friday only. This is the previous close. This is the basically the price has fluctuated so many times that you can see the volume, how many shares it has got traded, right? Now, if I scroll down here, you can see basically the fluctuation for that day, right? You can see for 1 month also, this is how the ABB shares has fluctuated for 1 month, right? So if you are buy at this time and you're sold here, that means you have made a profit. And reverse is that if you buy here and sold here, that means you have made a loss in that share. Okay.
Okay, sir.
So this is basically based on the ratio analysis. This thing you can do a focused. That is another thing as a shareholder one can do as an investor, right? Now coming to this, let me see if it works this time. The financials. Then I can show you how basically the financials are there. And this is basically the performance of the shares for this. Basically, you can see for today, yesterday, 1 week average, how they have performed. That is also indications are there. Now, maybe next week I will just check. There's some problem I'm facing now. I will just check on this because based on that, I can show you some of the financials. Otherwise, if I go to ABB, 23 annual reports. Quarterly and annual reports, right? Anyway, facing some problems at some, yeah. Now, for example, if I go to the investor and shareholder here, quarterly reporting, you can see the reporting here. Any company, but it's all available in internet. So you don't have to, so you could go to the annual reports, right? When you go to the annual report, you can just download it. Now you can see here, if I scroll down here, still running. So this is basically, in olden days, you will find this, who are the shareholders, maybe your parents, getting kind of annual reports sent to them, right? But nowadays, what happens? It is basically online. You can go and view. Now this is basically, you can see they provide a lot of information, and then basically it will come the reporting, that is balance sheet and profit and loss, how they have worked, and all those information comes. Right? You can see all the information they will provide. And after that, they will come and show you what is the order booking. These are basically notes to accounts, what we say, right? So these are the informations that is provided for building the balance sheet and profit and loss. So one can go through it, and you can see there are a lot of information that are available, right? So before you join a company or you want to do some analysis, you can do an analysis based on this balance sheet and profit and loss also. So this is called the annual reports. Now coming up, if I scroll up, can you see this one?
Yes, sir.
So this is basically sale of the products, right? So if I go here, now if I go to my this thing, ABB, right? You will find this is, I've taken for the profit and loss for India, right? And this is what it is showing. It is showing for the financial year consolidated balance sheet and profit and loss to the globally, right? So this is for the year that is showing. So this is in $1 million. Can you see? And mine was in Indian rupees. Okay. So this is showing at the global level. So ABB is globally is a $24 billion company. Now, similarly, if I want to go for ABB and search ABB corporate for India Limited, ABB India Limited, let me close this. So what you can do is that when you go to the any reporting, you need to check for the country also. Now, for example, ABB Limited, India Limited, right? Now, here itself, we will find financial results and presentations. You will find quarterly and annual results. Are you with me? That was what we got is the ABB Global. It's a Swedish company. It's a quarter $24 billion. Now, if I go to my reporting here, and I can just go and see my ABB reporting, right? What is the press analyst presentation they have done? What they have done is the published results. So we can see each and everything here. For example, if the published results, what they have done, right? So you will find this kind of information, and followed by, you will find the reporting here. So you can see this is total income from operations. Can you see in crores? This is quarter. And this is the previous year ended. So 8,567, if you see, and the figure here, 8,567. This is for the whole year. Are you with me?
Yes,
Students?
sir. Yes, sir.
So Now, what I'm doing is I'm going to the public information, internet, and you can find. So this is for the quarter, that is from January to March. This is the result. Now, this is basically, you have the net profit, right? That is before tax. Now you have got after tax. Then you have basically your shareholder capital. Our share capital is 42.38 crores. So this is your share capital, and this is 2 rupees. So based on the face value, it is 2 rupees. So you have got the EPS of 11.57. Now, how you can do, whatever is your profit, if you divide it by this, you will get the EPS, earning per share. Are you with me? Any questions?
No, sir.
No, sir.
So this is how you can calculate your earning per share. So I just wanted to show you how this can be done. Okay, so let's go to our slide. So as you can see, these informations are readily available, and you can basically provide the information which is from the available information. You can calculate based on the ratio, the health of the company. Now, next is, for example, this is a company where you can see this is a balance sheet of a company. Now, if I go to the balance sheet of that company, now you have got the liabilities. Now, for that liabilities, as I told you, you have the share capital and a reserve that is called the owner's capital. Then you have the borrowings. So this is the amount of lakhs of rupees, that is almost 619 crores is your borrowings and total capital employed. And this is your fixed assets. So you have got the net block. You have the gross block minus your depreciation provides you the net block. Then you have the investments and others. So this is your net fixed assets. Your current assets consisting of inventories, debtors, cash, loans, and advances, right? And you have this, your current liabilities. And as you can see here, this matches, the liability matches with your current, your new assets. So net assets absolutely matches with your your liabilities, isn't it? Some shows this current liabilities under here in the liability side. Then of course it will again match because your asset will be more by that number of liabilities, because liabilities is shown into the liability sector and not into here. So both way one can show it. Next is here, as you can see, for this year also there is a comparison. Generally, when profit and loss or balance sheet is done, it is also done with a comparison with the previous period. Any question in this, student? Hello?
No, sir.
Okay. So this is basically kind of your profit and loss. So this is a sales, as you can say, you are having next cost of goods sold that will provide you gross profit, right? And then basically you have the operating expenses, and then you basically will have your profit before interest and tax, and less your interest, then profit before tax, then any taxation amount is there, and then you get the profit after tax. Any question on this? Have you understood how the profit and loss and balance sheet is represented?
Yes, sir.
So those who are not from the finance background, now you are comfortable with how finance reporting is done in balance sheet and profit and loss? Any questions? Hello, students.
No, sir. No, sir.
Okay, so this is at high level, this is done. And then basically the ratio accounting, the liquidity ratio. Now I have given you the formulas, if you remember. So you have the current assets from the balance sheet, what we have shown before. You have the current liabilities. Now the current ratio is current asset minus current liability. And it is basically this figure divided by this figure that provides 3.05. And as you can see, that is quite a good amount of current ratio. As I told you, 2:1 is a good, and if it's more than that, that means the company is a healthy company. And if I do a year-to-year comparison, I can see here my current ratio is increasing. That means my assets are increasing. Next is quick ratio. Quick ratio is basically current asset minus inventories by current liabilities, and based on the balance sheet what we have shown before, we got 2.04, and here it is 2.33. So tell me, student, is it looking good or looking bad? Hello, students. Yes, students. What do you think? How the current ratio and quick ratio, how the company is performing?
It's good, sir, because current assist is in 2021 is the 35,096.72, but now it is increased for 44,191.
You basically based on the current ratio and quick ratio, what is your thought process? So what do you think? What will be a prediction? What will be as a doctor? Now the company has come to you as a doctor, right? So what will be a prescription for this company?
It's a quick ratio, sir.
Yes, quick ratio. Tell me what.
I don't know.
So from here, what we can understand, though the current ratio and quick ratio, the liquidity the company is quite good, but what is happening is that if that ratio, if you can see, my current asset has increased. That means now, as you know, one need to look into the conversion of that. That means my inventories, right, is basically how I'm able to manage my inventories, whether I'm able to sell it off faster, whether I'm going to my working capital, I'm able to basically multiply my working capital usage. Those things need to be taken care, because ultimately more I basically able to utilize my number of basically the sales, right? And basically the number of times I can increase my turnaround time of my working capital, and then it will help the company to generate more cash, and it will basically help the company to generate more profit. Because if you have got basically take longer time to realize your cash from your debtors, that means actually you're losing your basic interest part of it also, right? So one need to look into that. So the prediction is that though the company here the liquidity ratio is quite comfortable position, but the company need to convert basically the inventories much into your cash much faster, and that should be your prescription to the company. Okay. Now I move on to the next ratio. This is solvency ratio. In case of solvency ratio, as you can see, that you have got the net worth, you have the borrowing, you have the capital employed, you have the profit before interest and tax and interest, and based on that, the debt ratio is borrowing divided by the net worth, and that is shown as 3.01, right? And debt to CE, that is basically shown as 0.75, right? So at the interest coverage is basically divided by interest is 1.24. That is quite healthy, and what we can see, it is increasing. That means the company is at a stronger position now, isn't it? Yes.
Yes, sir.
And the debt equity ratio, it has come. That means the company is able to pay some of its debts also. That means its debt has also reduced. If I go and see the borrowings, though it has increased from 61 to this thing, right? But if you see, my net worth has also increased. Can you see this one? Okay. So these are some of the things one need to look into. In the ratio analysis, as I told, it's like a doctor. You can able to prescribe what are the good things or bad things. Next is your activity ratio, or basically the ratio that provides how the company is performing, right? Now, the turnover ratios, for that we can calculate is basically sales, net assets, inventories, debtors. So net assets turnover is basically sales minus net assets. That provides you kind of a turnover ratio for your based on the net assets. Now, as you can see here, the sales has increased drastically. Can you see this one? Right? And similarly, your asset has not increased, net assets. That means this company is doing quite well without increasing too much of assets, it's able to sell. So this is in a healthy state. Next is inventory turnover ratio, that sales divided by inventory. And as you can see, it has also improved. That means in this front also, it is doing pretty well. Debtors turnover, sales by debtors, it has reduced. That means it is able to get the cash from the debtors much faster. Collection period, as you can see, it is basically, in this case, it's 109 and 115. So that is basically, it has got increased. And if it is increased, that means the amount of time it is taking for basically getting the cash from the debtors is quite high. And 115 days is very, very high. So that means this company need to take a look into the perspective and need to do some bill discounting or need to work with your customers to provide some kind of cash discount on this thing so that this is reduced and able to manage the working capital much better. So one need to look into this also. Any questions, student? Okay. Next is basically the profitability ratio, and this is very, very important for you. Those who wants to basically do investments also. So return on investments, next asset net worth. This is going to be it. This is basically profit before interest and tax, less other income. So PAT is there. As I told you, after PAT, your dividend and other things is calculated. ROI is very, very important. ROI is basically profit before interest and tax minus other income divided by the capital employed. Because from the ROI, one can determine whether you should go in investing in this company or how the company with the capital that is employed, how it is able to manage. Now, if you can see year to year, it has the ROI has increased. That means the company is doing pretty well. It's a very healthy company. ROE is basically return on net worth, right? So here, basically, you know what is net worth, which we have shown in the before. That is basically shareholders' capital or shareholders' capital, right? Or owners' capital. Now, how they're doing performing against that shareholder capital or owners' capital consisting of shareholders. That is basically equity. Equity is both normal equity and preferential equity plus your reserve and surplus, and how it is able to generate profit on that amount. Now, if it is increasing, that means it is going to be able to return to the shareholder much better in future. And that is what is one of the prescriptions we can think that this is the company I should hold on, and I can see in future I will get much better return. So, students, any questions? Any questions, student? Okay, now let's go to some interesting topic, right? Now, for example, this is one company. Now, Oil India, for example, you get a statement like this, that Oil India reported 14% decrease in top line to 2,097 crores in Q1, mainly because of lower net crude prices realization, while bottom line fell by 35% to 609 crore. That is basically net profit. And top line in Q1 includes other operating income of rupees 116 crore. So tell me, for this Oil India company, is it doing well in this quarter or is facing any issue or problem? Now you have gone through, I've explained to you how you ratio analysis, how some of the balance sheet and profit and loss. So what you're understanding from this statement? Hello, students. Tell me, any understanding you're having? See, in this case, you can understand that there is a decrease into the profit, right? Because of the crude prices has gone down, because Oil India is basically selling crude oil. Like ONGC, Oil India also sells crude oil. And that is why the bottom line or the net profit has fallen down. So that means they're not able to do well in this quarter. Next is, there is another OMC's company. For example, the subsidy has got reduced by 2% by 1,982 crores. And because of this subsidy, what has happened? Profit has got affected by 1,123. That means this company is not able to do well in this quarter because it has got less subsidy from the government, and for which the profit has come down. So if you see the last year, most of the OMC companies have suffered because they could not able to realize the sales price against the increase in the crude prices, the raw material. Next is basically OPM, operation performance management, fell by 840 points basis to 38.8, as employees cost as a percentage of net sales rose by 17% from 14%, and other expenses increased to 12% from 8%, while royalty and sales payment remained flat at 32%, leading to a 29% decrease in the operating profit to 813 crores. Other income fell by 4% to 351 crores, interest cost being negligible at rupees 0.9 crore, while depreciation cost increased by 90% to 266.5 crores. So profit before tax as a result fell by 35% to 898 crores. So here, as you can see, the company has not done well because its employee cost has gone up, other expenses cost has gone up, whereas its operating profit has come down, right? And because of which its net profit has also fallen by 35%. So this is where you can do kind of an analysis. See, why I'm telling you, some of you may go to analysis or analytics. You need to know how the financial analytics is also done. So this will really help you on that. I go to the next slide. Now, this is basically kind of a Coal India in one of the year. As you can see, there has been kind of a total revenue, total expenses. We have already explained to you in one of my Excel sheet. In Coal India, the profit before tax, how the tax comes, and the net profit. And based on that, as you can see, we can see that there is kind of a, what is the percentage that has increased, right? Now, this is quarter and this is year ended. Now, based on the quarter and year ended, what we can see that the profit has basically increased in the quarter more than the profit that has increased in the year ended. So that means this quarter it has able to do much better. Next slide I go. This is basically, in this case, a capex of rupees 17,814 crores was incurred, with 14,100 crore of assets been commissioned in financial year. Assets are getting commissioned at a faster pace, thus improving the overall return on equity for the company. The net sales were up by 20% with 10,035 crores, and PAT rose by 21% to 3,254 crores. We expect the company to register sales of around 12,283 crores and net profit of 3,934 crores, right? EPS works to 8.5 and the share price trades at 112 with discounts to projected financial year 2013 EPS by 13.1%. So what you can understand from this company? Anyone want to volunteer? So as you can see, this is a capital intensive company, Power Grid, right? The more they install their capacities, more revenue they can generate, right?
And
more,
also, sir, they're putting the assets to work more quickly. So
yes,
they are generating return on equity at a much faster rate.
absolutely good. Very good. So this is what we can understand from this statement. I just wanted to all of you to understand some of the statements. I know most of you are not from the finance background, but at least you should make it up, because later on when you go to the corporates, nobody is going to teach you. You have to learn on your own, because you have to do the analytics and reporting, right? Now this is year-wise. Of course, we have walked you through. I'm not going to take you through again and again. So this is basically like a Power Grid corporations year-wise, you can see. Similarly, this is basically kind of balance sheet and profit and loss, which we have gone through. And somebody was asking, so this is basically the payout ratio. Is he or she is there in this call who was asking about the payout ratio on the dividend? So you can see this year, the payout ratio has increased to almost 54.7% of the profit, right? So this is how one need to look into whether the company is making basically how much is the dividend one can expect. So generally, as you can see, it was ranging between 31 to 35%. So what is the net profit? One could have expected that kind of dividend, but this year they have given much more.
Sir, can I add on to payout ratio? Sir?
Yes, tell me.
Sir, regarding comparing year-wise payout ratios, which was earlier at 30%, now at 55%. So compare year on year, they are giving more of their profit to the shareholders.
Yes.
So it's better to be invested in this company. Shareholders are getting a bigger chunk of the company's profit to their pockets.
Yes. So one thing is that means is that the shareholder who are looking for dividend, right? For those investors, they can actually look into this company. That means they're going to get higher dividends.
Yes, sir.
Good. So these are the kind of basically analysis one need to do it. So to find it out whether you should invest, how you go to analysis, because ultimately your analytics and other things will come. Now you have got in SAP also, you've got financial statements. You will find FS, what we call that basically you can configure based on which you can have, and you can have multiple FS versions also. So that is why I was asking in SAP who are doing SAP, whether you have touch base on those financial statements, how it is created. So from the GL accounts, basically those will be mapped into the financial statements, and basically the groupings will be done. As you know, who are basically from a finance background, when you do a balance sheet and profit and loss, based on the groupings, your reporting is done. Okay. Any questions?
Okay. No, sir.
Good. Now move on to the next one. So again, this is another balance sheet and profit and loss. So here we are able to see the book value. Now certainly one can ask the book value from here to here, it is reduced drastically. That means they've issued a lot of bonus shares, and that what we can see if the share capital has been mentioned, we can find that the share capital has increased by a number of times. So that is why the book value from here to this one, this year to this year, has come down drastically because they've issued. So this is what one need to look into, right? So how this has been done, or there is been divestiture they have done. So those things one need to look into account. I move on to the next slide. Now coming to this. Now, as you can see here, you have got three companies: Vodafone, Idea Cellular, and MTNL, right? Now you have got equity. All three are different. You have net worth. You have got capital employed. You've got sales. You've got fixed assets. You've got total assets. You've got working capital, and you have got profit before tax. Now, looking at this, which company you think is the best among the three, or where you think is basically one is lacking the others? So you can see profit wise, your Idea Cellular is the best, right? It has got 1,116 crore profit. But if you go to your ratio between your sales to your profit before tax, whether it's the best or not, you need to look into. And you can see the working capital is negative. So working capital front, it has not done well. Now, if you go and see here, the total assets, right? It has got almost 16,000 crores and it is earning only 1,116 crore profit. Whereas here it has got maximum around 20,000 crores, but it is basically earning only 811 crores. So if you want to look into basically your fixed assets, total, if you go to the total assets, right? If you go to the total assets of what is the fixed assets is there to your here, if you want to the sales, you will find this is not doing well, isn't it? That is the capital employed to the sales, that ratio, it is not doing well. Now, one need to look into this. In this case, the Vodafone, if you see the Vodafone, the revenue is the least.
Yes, sir.
Right. So before, and you can see the capital employed. Capital employed here is the maximum in case of Vodafone. Now, looking into this basically, now if you see the equity of here, it is only 630 crores and you're getting so much of profit. That means MTNL can provide much more dividend to you. Isn't it?
Yes, sir.
So its share price will be on the higher side than the other share because of the PE ratio. So this is how one need to do a comparison among the competitors, because there are certain mutual funds or some sector-oriented funds, right? They invest into those sectors. Now, if you work in a corporate also, you need to do comparison for your company or the industry you are in, right? So whether you're at par with the industry or you're going below the industry, those ratios, or you're basically your health is over and above your industry parameters. So looking at those only, one can see whether it is good to be into that business or any injection or anything is required to improve the health of the company. Are you with me?
Yes, sir.
Now, accounting is a system that provides information on amounts of resources, how resources were financed, how were the resources invested, and results achieved by using those resources. Right? So, as you know, resources are limited, so we need to utilize them in a much better way, and the resources need to be invested properly to get the best out of it. And most important thing is that we need to do a internal and external reporting, and for that we need to basically have our reports done. And here also you will be asked to work on those reporting as perspective. And when you go for a reporting perspective, you need to look into how you have to understand, at least at the high level, balance sheet and profit. Without understanding, you will not be able to help the reporting. So this will be done for the parties inside, that's management, and outside for the shareholders. Now, who uses this? Internal users are human resources, finance, management, marketing. External users are tax authorities, customers, regulatory agencies, labor unions, creditors, and investors, right? So the accounting information has to provide it to all these people, and for this, the reporting need to be done. Any questions? Hello, students, any questions?
No, sir.
Now you tell me, this is a question for you. Can we afford to give our employees a pay raise? Which of this group will ask this question and whom you need to answer? Because here, basically, you need to understand in a corporate, there are multiple stakeholders, and you need to basically reply to these stakeholders properly. So this will be, which stakeholder do you think will be asking this question?
So it will be HR and labor unions.
Okay, so you're correct. It's human resources. Very good. Next is what price for our product will maximize net income? So which stakeholder will ask this question?
It is the marketing department, sir.
Excellent. Very good. So where is others? Chandrakant, you are very good, but where are others? These are very, very interesting. See, people, if you can join, it will be good for you only. Which, and be interactive. Which product line is most profitable? Who is going to ask this question? And whom you need to provide the report?
So it is the board members who will ask these questions.
So it's management.
Yes, sir.
Is cash sufficient to pay the dividends to the stakeholders? Which department is going to ask?
Finance
Again,
department.
Yes, perfect. Very good. It's the finance. Okay. You feeling interested now?
Yes, sir.
Yes, sir.
Good. Now, next question. Is the company earning satisfactory income? Which stakeholder?
Shareholders.
Investors. Very good. How does Vodafone compare in size and profitability with MTNL? Which stakeholder will ask this?
Shareholders.
Customers.
Yeah, tell me.
Shareholders.
Yes. Will Yes Bank be able to pay its debt as they come due? Who's going to ask this?
Lenders.
Vendors. Laborers.
So you know about Yes Bank story, right? How many of you know Yes Bank? Yes Bank really face huge problem, right?
Yes, sir.
Yes, sir.
Right. So this now, for example, this kind of a question comes right from where you can know from the liquidity ratios, right? Whether you're able to pay the dues or not. So the creditors will ask. So very good, excellent. So now you can see that you are able to have a grip. So if anybody asks this kind of questions, see nowadays in the interviews also, you will not going to get your technical questions. People knows that you can go to ChatGPT and you can get all your answers, or you go to Google, you get all your answers, right? Basically, the human's brain is much more powerful because still ChatGPT or Google is not as intelligent as human. It is the human brain that is more intelligent, right? That is why they're going to hire you. Otherwise, they can have the ChatGPT or Google. Isn't it, my student?
Yes, sir.
True, very true, sir.
So that is what I want to give you the sessions and give you and equip you with more information so that will really add value to your life. Okay. Now I go to basically all businesses are involved in 3 types of activity. One is financing, investing, and operating. Okay. The accounting information systems keeps track of the results of the 3 of each of these business activities. So financing, investing, and operating, right? So you will find these are the 3 leverage also one need to take. Looking into which leverage one need to take to attain higher profit. Okay, so these are going to be the management decisions one need to think through and they are going to take. Now coming to the most important thing, how we do activities, right? And based on the finance, investment, and operation, right? The information coming from those, we need to do a proper reporting. Are you able to see my screen?
Yes, sir.
Yeah. So accounting processes need to be done based on what are the activities that has happened. So based on the accounting information that is available, right? As I was telling you, giving an example, like if you are working on a, for example, construction. Now, based on basically the milestone based, how much is getting constructed, you can only generate your invoice based on that. Similarly, if you are selling For example, commodities. For example, you're selling pen or you're selling maybe football, right? Now, based on the number of units you sold, you can generate basically your revenue. Similarly, to produce that, what is the amount available in your stock, right? Those will be your, and also the raw material that is available will be your inventories. Then basically, if you're giving some credit to your customers, that will be the remaining part that will be available as your receivable. Similarly, vendors, what you're going to need to pay to the vendors will be, you need to record it as payables, right? So those based on the accounting information, what you need to do, you need to prepare your financial statement, isn't it?
Yes, sir.
And these are the very, very important before you go to SAP and this thing. If you don't understand this basic things, it will be very difficult for you to basically configure work on SAP, because ultimately SAP works on the business knowledge. And nowadays, everything is available in Google and you can type it and you can do it. See, when I started SAP in 2001, Google was not there. So we need to struggle a lot for the configurations. And nowadays, everything you go, blogs are there, everything is there, and everything you can see, it is available in internet. But if you do not have the proper business knowledge or the logic, you won't be able to configure, or you're not able to do any programming. Understood?
Got it.
Okay,
Yes, sir.
so based on that, you will have basically dashboards and reports, and then based on that, you will do your decision making. So similarly, you can create wonderful reports. You can do predictive analysis. You can basically do, as I mentioned to you, using AI ML, you can do the reconciliation. You can do basically kind of automate the whole process, right? With less human touch. Then basically, if somebody is managing the EMS application, then what are the levers, automation, or robots you can build in to shift left tickets that you don't require human touch to resolve that. Then you can create your chatbots, right, to answer the basic queries and help the people to make those changes. So all those things can be done, but before that, you need to understand the business purpose of it, right? And then you can create those. Okay.
Okay.
So based on this decision making, you have the actions and decisions, and this will go on and go on this cycle and continues. Okay. Right?
Yes, sir.
Okay. So creating accounting heads, you have learned what is assets, what is liability, what is equity, income, and expenses, isn't it? Any questions on that?
No, sir.
Okay. Next is in finance. There is one concept who has studied finance that I was asking. The golden rule of finance is every accounting entry has got a debit and a credit. Sum of all debit equal to sum of all credit, right? So this is the check. So that is what is called double entry system. That is the golden rules of accounting. Okay, isn't it very simple? Then accounting equations, right? So what I told you is assets equal to owner's equity plus liabilities. Owner's equity, all of you know, I've already told you, it is shareholders' capital plus the reserve and surplus, and plus the liabilities equal to assets. Next is resource financed by business creditors equal to business creditors plus lenders plus capital employed by owners. And resource invested in equal to fixed asset plus investment plus current assets. And left-hand side equal to right-hand side, and that is the simple logic in balance sheet. Okay.
Yes.
Next is elements measuring financial positions. That is your assets, liabilities, and equity. That will provide you the measuring of financial position. Next is element measuring the performance is revenue divided by income, that include gains. That is basically what? Revenue or income, right? So revenue or income, including the gains, provides you the performance. Similarly, expenses, including losses, will provide you basically the elements of performance. So if your revenue increases year to year, that means your company is able to sell more and more. If your expenses, right, increases year to year, that means your revenue is not increasing, that means you will be in a big problem. So that is why we have the gross ratio, net ratio to measure the basically whether your company is profitable or not. Right?
Yes, sir.
Now coming to this balance sheet, you can see this company is having cash, receivables, right? Now you can see the cash has increased, the receivables has increased, the inventories has increased, whereas your sales has also increased, right? And you can see the COGS has increased year to year, and other expenses has also increased year to year, right? Now you can see one thing here. You have made earning before interest, tax, and depreciation around 6 lakhs, where here is minus 13,000, right? So you can see that means this year it has not performed well. And with the depreciation and amortization coming in, it has actually made a loss. And with interest expenses, it has made further loss. Can you see this one? Of course, tax, since in the previous period, it has already paid tax. Because of it loss, some plowback of the taxes come. And this is basically, you can see compared to this, it has made a profit in this current year, 1,90,000, with a made a loss of 1,60,000. So what are you understanding from this statement?
They generated the increases so profits in 2021 is like it is in a minus balance, but now in 2022 they earn extra 1,90,000. It's a plus point.
Yeah, so very good. So actually you can see it has basically 10 lakhs of increase in the sales, but if you see the corresponding increase in your COGS is much less, and that has generated, and also the other expenses is not increased by that same percentage, it's much less. That has actually given you an increase in your what? EBIT, that is earning before interest, tax, and depreciation. Now, if you see the company has not invested further in the capital assets, so the depreciation remains the same. Interest expenses has come down. That means it is already able to pay a part of its interest or the basically capital loans. So that's how it has reduced its interest, and so it's better managed in this year, and that has generated into a profit of 2,53,000, right? And it is able to pay some dividend also. So the shareholders are also happy.
Yes, sir.
So this is where now you are coming into more of a management perspective, and you're providing your views, and you're able to help them to create basically how better they can manage the business. So more they are able to control their expenses better and increase the revenue, and that is help them to earn some profit, isn't it?
Yes, sir.
Yes, sir.
Very good. Now, some definition of some terminology. So assets are probable future economic benefits, has got probable future benefits. Liabilities are probable future sacrifices for the economic benefit. So we, for example, we go for to buy an inventory. Maybe we need to buy basically creditors. We have to have creditors, right? From whom we are going to have the inventories. Similarly, for example, we want to buy some assets. Now we say that I will pay you after 2 months, and we create some creditors, right? So that is capital creditors. Maybe we are taking some bank loans, liabilities we are taking to furnish our growth for the working capital and to basically buy some machinery, equipment, or building some assets. For that, we are borrowing some borrowing and taking some loans, right, for our growth. Equity is the residual interest in the assets of an entity that remains after deducting its liabilities. In business enterprise, the equity is the ownership's interest. So owner will only be interested if they see that equity is getting increased year by year, isn't it?
Yes, sir.
Revenue or income inflows that results from an entity's central operation or core activities or principal business. So these are just the definitions so that who are from non-finance, at least they can understand what is this terminology means. Any question?
No, sir.
Examples: sales for manufacturing, trading companies, interest and investment income, or for banks, right? So these are some of the definition. So increase in owner's equity and expenses, outflows that result from an entity's central operation. So to buy your raw material, to buy your basically some equipments, or to pay salary, or basically rent, right? Those things will be your expenses, and that is basically from your central operation, you have to pay those. Examples: raw materials expenses, personal expenses, manufacturing expenses, selling expenses, etc. Right? Any questions?
No, sir.
So that all result into decrease in owner's equity, isn't it?
Yes, sir.
So revenue and income helps you to increase the owner's equity, and expenses actually reduces the owner's equity. Okay, now we will go to a small example. Kohler Inc. had asset of $280,000 and liabilities of $120,000 at the beginning of the year, and assets of $400,000 and liabilities of $1,400. During the year, there was an investment of $40,000 in the business by the owners, and the company paid dividends of $48,000 to the owners. Now you tell me, what amount of net income did the company earn during the year? A small question to you. Please give me the answer. So please work it out and give me the answer based on your understanding. So you have got 5 minutes. So what is the profit for the year for this company?
So $128,000 profit side. And on liability side,
I say, what is the profit? I don't profit set from this thing. I'm not asking you. I'm asking you, what is the profit the company has earned for this year?
so is it 108,000, sir?
Okay, how you have got it?
So on profit side, it had assets of 280,000. It went up to 4 lakhs. So there was an increase of 120,000 in asset side. Whereas owner have made an investment of $40,000. $40,000. So it got reduced to 80,000, sir. 80,000. Whereas they have made payment of dividends worth 48,000. So add this to 80,000. So it became 128,000, sir. Whereas on liability side, 120,000 has increased to 140,000. So minus this 20,000 from that 128,000, we'll get 108,000.
Very good. So this is how you get it. So what you told, it's in the last line. Others, please check it. Since I'm just trying to give it basically through an Excel, how it can be done, so that at high level, all of you can understand. Hello, students.
Yes, sir.
Any questions? Okay, so do you tell me what are the drawbacks of ratios? We have only talked about the good things. So the drawback of ratios accounting is the financial statement is based on the historical records, right? A particular business may be faced with issues not common to the industry. Next can be, what about the new companies? Maybe if it is a new company, then those companies' initial ratios will be absolutely, you cannot compare with the industry. Next is one need to understand the choice of accounting policies in the financial statement figures. So if they're not following the standard accounting policies, then or changing the accounting policies can hamper. Next, I've shown you into the Coal India results. There was a change in the accounting policy. That is why if you see there was the amount coming less in some of the, you can talk about GL accounts and other GL account, it was increasing, or the basically items. So those are basically results of the change in the accounting policy. Next is the strength of the company. For example, like HDFC, which are the market leaders, they will always have a premium into the prices. And next is whenever there is a danger of hostile takeovers, right? If you have seen Mindtree was taken by L&T Infotech, right? So there was a hostile takeover. Those times the ratios may go for topsy-turvy. And strength of the competitor. If the competitor is very, very strong, and if it is a capital intensive industry, then you can have basically the comparison ratio analysis may not give you the 100% health of that company. Okay, so I wanted to tell you about that also. Okay, now let me go to the next thing. Now, what you think is that in fact, few of us, around 6 people, right? Six of us invested 5 lakhs to a company, right? A consumer durable items. So your asset equal to liabilities plus owner capital, and cash is 30 lakhs because 6 of us has invested 5 lakhs each, isn't it? Yes, student.
Yes. Yes, sir.
So your asset and liabilities become 30 lakhs. One side equity is 30 lakhs, other side cash is 30 lakhs. Cash here means cash and bank, right?
Yes, sir.
Very simple. Okay. Now, 6 of us, we took a loan of 20 lakhs. What will happen, my students?
Assets will be worth 50 lakhs, sir.
Very good. So liability?
And liability also 50 lakhs. Whereas 20 lakhs from the bank and 30 lakhs from the owners.
So how will you show in our liability side? Asset side, you said correctly. 50 lakhs in the bank account, right? The liability side, how will we show? We will show 30 lakhs from shareholders and 20 lakhs from
Bank.
Loan from banks, borrowing,
Loan from bank.
right?
Yes.
So what we will show is that cash 20 lakhs equal to bank 20 lakhs, what we receive. Overall cumulative impact will be cash 50, loan 20, and equity share capital 30, isn't it?
Yes, sir.
Very good. Now, if we take a showroom, right? 6 of us doing business. Where others I do not know, they're not interacting with me. So I'm only taken 6 people. So others, please start interacting. Okay, so if I taken a showroom and paid only 5 lakhs as a refundable advance, right? And to be returned on vacating this premise or the go down, and rent is agreed at 1 lakh rupees per annum. So what will be the impact?
At the end of the year, if you vacate the showroom, out of 50 lakhs, the balance sheet will be of 38 lakhs.
Think through what you are saying. So how will you represent it, your balance sheet now?
The expenses on liability side will be showing it as expenses paid of 1 lakh per month, so 12 lakhs per annum.
I have not paid the rent yet, right? It's agreed. You know, in finance, we do an agreement, right? But until unless it is paid, I have not paid. It's an agreement, right? In finance, where is the accounting? No accounting happen only.
In that case, it will be rent payable, sir.
Rent payable, but I have not paid it, na payable. ठीक है, अभी तो month end में होगा. अभी तो just agreement sign किया, right? When I signed an agreement, there is no financial transaction.
Okay.
Right?
In that case, it will balance sheet will be of 45 lakhs. Either side.
Think
because
through.
you have already paid the 5 lakhs as a refundable advance to the showroom owners.
So you have got a 5 lakhs advance paid to a showroom owner, right?
Yes, sir.
So asset equal to liabilities and owner's equity. So you have got an advance rent of 5 lakhs and you've got a cash of minus 5 lakhs, right? So what will happen? The cumulative impact here will be advance 5 plus cash 5, that is your assets, 50 lakhs, loan 20 lakhs, share capital 50 lakhs. So still your balance sheet will show 50 plus 50, 50 equal to 50. Okay. Isn't it? Only in the asset side, there is a change, bifurcation. Because cash coming down, cash and bank by 5 lakhs and advance, right? Increasing by 5 lakhs, isn't it?
Yeah, got it, sir. Advance 5 will be the asset which I'll be utilizing for next 12 months.
Yes. You got it? This is not going to affect, rent is not going to affect your balance sheet.
Okay.
Please understand, that is a profit and loss account. Only if it is rent payable, that's going to impact. Since you are from finance, you should be aware of this, na?
Yes, sir.
So that is not your balance sheet item. That is a profit and loss item. Okay. Now coming to this, I bought furniture for the showroom for 5 lakhs. What will be the impact?
Again, it will be the same, sir. Asset side, my cash will be converted to furniture.
Cash will be coming down. Yes, cash will be coming down, and my furniture, fixed asset of furniture will increase by 5 lakhs.
Yeah.
Right. So still it will be 50 into 50. Asset side 50 lakhs, liability side 50 lakhs.
Yeah.
But the bifurcation, furniture 5, advance 5, and cash from 50 lakhs coming down to 40 lakhs. Why I want to show all the students this, because if you are not aware how the finance works, when you go to any corporate and you start working on any financial opportunities, right? Whether you are doing coding or you are doing development in automation, AI, you need to understand some basic. Otherwise, it will be very difficult for you to have a grip of the things. Okay. Next is that you purchase an inventory of 60 lakhs, paid 50% in cash and agreed to pay balance in 60 days time. So what will be the impact? Tell me, what will be the impact?
So asset side, inventory will be added by 60 lakhs, whereas cash will be deducted by 30 lakhs. So we'll be having a cash of 10 lakhs and inventory of 60 lakhs.
Okay. That is all the case. So what happens? You need to pay another 30 lakhs liabilities, na? Creditors.
Yes, sir. Yes, sir.
So creditors, this will increase by 30 lakhs, isn't it?
Yes, sir.
So the impact will be inventory 60 lakhs minus 30 lakhs in the asset side in the cash, but your credit is increasing by 30 lakhs,
30 lakhs.
right?
Yes, sir.
So cumulative impact will be furniture 5 lakhs, inventory 60 lakhs, advance 5 lakhs, in your cash equal to 10 lakhs, right? So overall, you're going to have 80 lakhs now, both the
80 lakhs.
sides,
Yes, sir.
right?
Yes, sir.
I'm trying to make it as simple as possible for you, because I know a lot of people are not from finance background, so I'm trying to keep it as simple as possible. I think who are from finance background has not seen how simple we are trying to make it, isn't it?
Sir, it's very simple, sir, because only LHS and RHS are getting expanded rather than having it in a tabular form.
Yes. Next, I sold 40 lakhs of worth of inventory for 50 lakhs, right? So cash sales is 30 lakhs and balance on credit. So what is the impact?
So our inventory will decrease from 60 to 20 lakhs, whereas cash will increase by 10 lakhs to 40 lakhs. And cash receivables on the RHS will be added by 20 lakhs.
Yes, the debtors 20 lakhs. Very good. So you have got inventory that is going to reduce by 40 lakhs. Debtors increase by 20 lakhs. Cash increase by 30 lakhs, right? Your other side will be sales minus cost of goods. That is your profit by 10 lakhs. That is now coming reserve and surplus. So now your income and expenditure from there, its figure is coming. Right, Chandrakant?
Yeah, yes, yes.
Because till now we were not having that effect. Now you are having basically some effect coming from your profit and loss or income expenditure. So cumulative impact is basically furniture 5 plus stock 20 plus debtors 20 plus advance 5 plus cash 40 equal to creditors 30 plus loan 20, equity share capital 30, sales minus cost of goods sold is 10, right?
Yes, sir.
Isn't it?
Yes, sir.
Very good. Then manager informs about the following dues. Staff salary, that salary and wages of 2 lakhs, advertisement expenses of 2 lakhs, interest 20,000, rent 1 lakh. Now I'm paying the rent. So these are dues. It is payable, right? Now how
Yes,
we will going to treat it?
So cash will be deducted by 5,20,000, sir.
Right? So you're right. So what is happening? Your expenses is this. The problem is that it is still payable. So cash is not reduced. So you have the expenses payable plus your operating expenses minus 5.2. That means cumulative effect is that you will have no change on your cash. You have plus your expense payable 5.2 lakhs will come here. Whereas from your profit and loss, you have to show this expenses. So your profit coming to the balance sheet is getting reduced. Chandrakant, you have to understand you have not paid, right?
Yeah, yes.
Right. So your impact is not coming anything on the cash till now. Cash flow. It is not affecting your cash flow. Right? Now,
Okay,
dividend paid to investor is 1 lakh. Now, what is the impact?
The cash will lessen by 1 lakh, sir. We have to minus 1 lakh from the cash available in the company, and the same 1 lakh on RHS it will be added to investors. Sir.
Sorry, it's not into the investor. It will get reduced from your profit and loss. Again, income expenditure, profit and loss, it will be reduced by 1 lakh. Isn't it?
Okay, sir.
So from there it will be reduced, right? So it will be cash will be 39 lakhs and minus 1 lakhs of dividend. Because whatever the remaining is basically reserve and surplus, that is getting added.
Yes,
so
sir, yes,
if
sir.
you paid the dividend, so already it will get reduced by 1 lakh, isn't it?
Yes, sir.
Very good. Now you have this balance sheet. you are seeing is that share capital 30 lakhs, reserve is basically 10 lakh minus 5.2 minus 1, the 6.2, that is 3.8 coming from reserve and surplus, isn't it?
Yes, sir.
So owner's capital become 33.8. You have loan from bank 20 lakhs. You have got creditors of 30 lakhs. Expense payable is 5.2 lakhs. And this side you will have furniture of 5 lakhs. Then you have inventory of 20 lakhs, debtors of 20 lakhs, rent advance of 5 lakhs, and you've got cash of 39 lakhs. And you can see both are matching to 89 lakhs. Isn't it very, very simple?
Yes, sir.
Yes, students. So some students were thinking finance is very difficult and they were leaving this session, right? But finance to me is very, very easy. Just you need to have the basic principles. Maybe you can just go through it because we will have some assignments on this also, because I think these are the basic things you should be aware. And when you go to any industry, you need to be aware of the finance part. Because if you are not aware, then it will be very difficult for you to in your day-to-day activities. If you are also like want to invest later on, when you have a higher income, you have to pay your tax. You need to basically calculate your income. And if you do not know about little bit of finance, it will become very, very difficult for you to manage your personal life and your office life also, corporate, or if you are in business, finance, you need to know. Now coming to this. So this is basically income and expenditure. So you have got a sales of 50 lakhs. You have got basically cost of goods sold of 40 lakhs, salary 2, advertisement 2, rent 1 lakhs, overall 5 lakhs. Then you have got basically interest of 20,000. So your profit before tax is basically 4.8 lakhs. So there is no tax. And after paying the dividend, your balance carry forward to balance sheet is 3.8. And that 3.8 is coming in here. So first of all, we prepare the balance sheet on basically profit and loss, and profit and loss, what is the reserve and surplus, we take it here. If it is a negative, then the negative will come and it will reduce the shareholder capital, the owner capital will get reduced. And if the owner's capital is getting reduced, that means owners are at loss in investing in this company. Yes, tell me, any questions? Now, from the cash flow. So cash flow from equity is basically from fresh equity is 30 lakhs, from bank loan is 20 lakhs, and received from customer is 30 lakhs. So this is where I've received the cash. And what are my payments? Paid to the suppliers is 30 lakhs, paid to advance rent 5 lakhs, furniture is 5 lakhs, dividend is 1 lakh. And if I reduce it, and balance for cash closing is 39 lakhs. So this is my cash flow summary. Any questions till now?
No, sir.
So you have understood the basic accounting assumptions, which is there and which is very, very vital for any accounting policies. And I just wanted to give you some of the basic accounting assumptions. And these are the one is that accounting concepts underlying the recording of transaction is based on a separate entity concept. So we have got a basically concept that accounting is done as a separate legal entity. It should not be that if you have your business, that your basically income and your business income is the same. It is absolutely wrong. Your business is separate legal entity and it should be calculated based on basically the income and expenditure and based on your amount of capital assets or the liabilities you have got. So you need to prepare either profit loss or income and expenditure and balance sheet and profit and loss. And based on that, you should check how your entity is going on, right?
Yes, sir.
Next is money measurement concept. So one has to measure the money. Otherwise, what will happen? You have seen what? If the owner thinks the business as his own, then what will happen? The business will collapse, isn't it?
Yes, sir.
So one of the good example is Kingfisher Airlines, right? Vijay Mallya. So he has spent so much of money on his own. The company thinking that Kingfisher Airlines is his own company, right? And he's unable to pay the loans. And ultimately what happened? Kingfisher Airlines had to go for a bankruptcy. If you take out the money for your own purpose, what will happen? The business will be done out of working capital and money. You cannot pay the creditors, and the creditors will then file a suit against you, and then your company is gone. Isn't it?
Yes, sir.
Yes, sir.
Next is the going concern concept. This is one of the basic, three of the basic concepts in the assumptions we do in accounting, that is separate legal entity, money measurement concept. So you have to measure the money, and going concern concept. It is a going entity, and you have to do the proper recording for this. Right? So an accounting period concept. So you will find it is done for a period. It is for 6 months, quarterly result, half-yearly result, 9-month results, or yearly results. And balance sheet is always as on that date, right? Balancing as at, and profit and loss for the period, right? So this is how in the accounting we do the reporting. So these are the basic things one need to understand. Any questions?
No, sir.
Next is financial statements are summary of accounting transactions and are presented in a manner to enable users to know the operating performance of the organization and also its impact to the overall value of the organizations, and for which we use the three: balance sheet, profit and loss, and cash flow statement, and which I've shown to you, and I hope all of you are now aware of. Any question on this?
No, sir.
So now all of you know how basically the financial statements works and what are the things you need to take care, isn't it?
Yes, sir.
Yes, sir.
Next is summarizes our assets, liabilities, owner equity, right? Then is the statement of financial positions. Then it shows your assets and liabilities and how you know how the net worth is calculated and how the balance sheet and profit and loss you can do. I've shown you with each and every increase and decrease or any actions, how your balance sheet getting affected on the asset side and liability side, isn't it?
Yes, sir.
Yes. So now, as you know, there are multi-GAAP reporting. You have got IFRS GAAP reporting, you've got US GAAP reporting, Indian GAAP reporting. Now, for example, the revenue accounting reporting in IFRS is 15. For basically, if you have got IFRS for lease accounting is IFRS 16. Similarly, as per the Indian Institute of Chartered Accountants, they have got the gaps they have already mentioned for revenue accounting, right? For here, basically accounting, how the lease accounting need to be done, how for a construction company, how the accounting need to be done, prior period close, all those gaps are there. Now I'm just giving a simple gaps for the depreciation or asset accounting, how it is done. Now, as you can see in the IFRS, for example, assets are broken up into current assets and non-current assets. Again, the non-current assets is fixed assets, investments, and others. And then basically the fixed asset into tangible and intangible assets. And generally the depreciation is calculated on actual basis based on what is the wear and tear they feel. And based on that, the depreciation is accounted. Whereas in Indian GAAP, how it is done, you have the assets into three classes, whereas fixed assets, investments, and current assets. And fixed assets, it is done as per the Income Tax Act for the income tax purpose, and for the reporting, it will be done as the Companies Act for the depreciation. Right? Now, this is how basically the reporting, just giving you one example, need to be done, and for that you have got the you have to do the based on the workings, you have to show how your amounts are getting calculated. That also parts from the notes to accounts, and that also need to be reported in the annual balance sheet and profit and loss, or the annual reports, or the quarterly reports which are published. Any questions?
No, sir.
Okay. So if you don't have any questions, I'll just ask you that let me know if you have got any questions. Otherwise, next Saturday, we will just look into your presentations for the remaining. And after that, I will start another very interesting topic, which will basically will be very, very interesting. And either it can be basically on blockchain,
Shall we
or
take
it
that
can
one?
be. Yes, tell me. So now we will just I will just start a new topic. So next week, next Saturday, it will be your presentations for the people on the drones. So I will be looking forward for that. So before I close, let me know if you have got any questions. Yes, student, any questions you have got?
No, sir.
No, sir.
Okay, then we will meet next Saturday at 2 p.m. So thank you, everybody.
Thank you.
Thank you, sir.
Thank you, sir.